MGO Global went up in less than 1 month, went up 600%. Amazing, an amazing return. And from this level of 60 cents, it can go up another 10x easily, because the market cap is quite tiny, only $5.4 million. And it can easily go to 50 million, quite easily, because of this small market cap. Now, as you can see, pre-market, the stock price is expected to go down 17%. And you have to be very careful with this company because it's heavily shorted and the risk is quite high. But also, you can make a huge return like this if you are lucky. And of course, you understand the business. First of all, to make again this return of over 600%, you have to understand this business, what they do and what are their plans. Because if you don't understand, you can't predict the future or try to predict the future. So first of all, I start with what they've done. In 2019, they launched the Messi brand, a premium line of casual wear, accessories and home decor, inspired by the player Leo Messi. And they found their website, themessistore.com. You can check their site, looks quite nice, Messi in first place, some pictures, and you can shop those products, hoodies, shorts, socks and backpacks. Now, if you choose one of their products, for instance hoodies, it directs you to Amazon.com. They have a shop here. They don't have their own shop. Be aware of this. And here you can buy their shorts and other products and see their prices. And of course their reviews. It seems that they have some reviews. Now, you have to understand that this was their first business. And to use his brand, they have agreed to pay here 4 million euros over the 4 years. So to take that trademark, that logo, that name from Leo Messi's trademarks, they had to pay 4 million euros over the 4 years. Now, what's wrong with this? They pay 4 million over the next 4 years and they can use this brand and sell their hoodies. The problem is, if you look at the revenue for the last 9 months, you can see that they barely made 2.6 million. They made 2.6 million revenue, but they had to spend over 5.6 million. So their business is not sustainable, wasn't sustainable. And then they decided, let me show you here, to assign the Messi license to Centric Brands, another company, which paid MGO $2 million in cash. And then, guess what they did? They discontinued this operation. Their store, the Messi store, you can see here. The company ceased operation of the Messi store. And as a result, they no longer make money from this brand, the Messi store. And that's why also the revenue in the last quarter has declined so much, from 1 million last year to 500,000. Now, you have to have a story about this company, how they started, what was their plan, how they done it, and the results. Because more recently they announced a business combination here between MGO Global, a brand portfolio company. They focus on building brands and selling their products. But so far they had only one brand, Messi, which was licensed, and then they sold it. And they want to make a business combination between their company, MGO Global, and another company, Heilmar Inc., which operates in the maritime industry, a global commercial and pool management business serving dry bulk, crude oil, and refined petroleum product tanker. Now, ask yourself, what's their common interest? I mean, what's the link between a brand company, a company that is focusing on building brands, and a managing business that serves dry bulk, crude oil, and refined petroleum products? What's the link between them? This is quite tricky. And that's why I think that the stock price was heavily shorted. And because it reached a low level, some people took advantage, and you've seen this increase in the stock price over 600% in less than 1 month. Now, you have to ask the question if you can make money further after a business combination. You have to understand that after this merger, here, the holders of MGO Global will hold 5% of the new company holdings common shares, which was expected to occur in 2024 at the end, but then they changed the deadline. They expected to vote for that deal on February 14th, 2025, and then maybe we'll see some results after that date. It may occur in the first half of this year or in the second half. So you have to watch that closely. Now, the problem I see with this company, even if the merger is a success, the shareholders vote for that approval, you have to look at the number of shares. Here, if you look at the number of shares for the last 9 months or the last quarter, you can see the number of shares has increased from 1.4 million to 2.5 million. In just 1 year, they almost double the number of shares. And be aware that this dilution may continue in the future. If you do decide to hold this company for the long term, you might face more dilution. Because after this business combination, the new company, the holding company, may continue to issue more shares. And if you hold the stock too long, you might have a bump in the stock price like this in the short term because of that short squeeze or other good news. And then, the company will start issuing more shares, and then you'll have a decline like this. So if you get a bump in the stock price like this, sell it immediately. You are lucky and you made a nice return, over 400%. But if you are planning to hold it for a longer period, like this, you know what will happen. A decline over 94%. So be aware that the risk is quite high. You might lose another big part of your money. But at the same time, if you want to speculate with this company, you can make a return like this in just, less than 1 month. 600%. But this is not investing, only speculation. So it's up to you if you want to get in this risky investment. If you want to play it in the short term, then go ahead. But don't put a lot of money, just for fun. And if you have other questions, please let me know in the comments.